One day changed 15 of the 20 contracts on our daily options board. That does not mean yesterday's research was wrong. It means an option is a moving contract. The stock price moves, time passes, volatility changes, and a different strike can become the better research candidate. Tonight, every updated contract gets its own card. We will show what moved, what returned, why each stock could move, and the risk on the other side. First, keep two scoreboards separate. Yesterday's 6-week cohort is frozen for 10 market sessions. Those exact 20 contracts do not change after we see the results. Today is day 1 of that test, and no current cohort result is being claimed tonight. The daily master board is different. It refreshes after the market closes. Today's board has 15 first appearances and 5 returning exact contracts. A different strike or expiration is a new exact contract, even when the company stays the same. That distinction prevents us from rewriting history while still letting the daily research improve. Each card has 3 separate judgments. The large overall number is the daily research grade. It ranks contract quality for further study. It is not a win probability. The percentage is bar chart's profit probability at expiration. It is a model estimate, not a forecast. The buy rating is the decision gate. Every contract is still rated watch because price confirmation, a live bid and ask spread check, volatility value, and position sizing have not been verified. Option premiums can change when the stock price, time to expiration, or implied volatility changes. That is why the grade can rise or fall without the contract becoming buy ready. Here are the updated calls, counting from 10 to 1. At number 10, Petrobras. The October 16th, $19 call. Research grade 65. First appearance. One contract was offered at about $66. The model probability was 26.7%. Profit rose 97%, and production set a record. The risks are oil prices, government policy, and capital spending. Number 9 is Intel. The October 16th, $95 call. Grade 65. Second appearance. The grade rose 1.6 points, but the rank moved from 8 to 9 because other contracts improved more. Cost about $550. Model probability, 28%. Revenue growth and the Intel 18A manufacturing ramp support the recovery case. Losses and execution remain the risk. Number 8 is New Holdings. The October 16th, $16 call. Grade 67. First appearance. Cost about $60. Model probability, 27.2%. New reported its first billion-dollar profit quarter. Higher delinquencies are the opposing risk. Number 7 is Alcoa. The October 16th, $55 call. Grade 68. First appearance. Cost about $275. Model probability, 27.9%. Record revenue and smelter restarts support the call. Aluminum prices and restart execution can reverse it. Number 6 is Meta Platforms. The October 16th, $600 call. Grade 69. First appearance. Cost about $2,035, the largest call premium on the board. Model probability, 27%. Revenue grew 28%. Rapid growth in expenses and artificial intelligence spending is the risk. Number 5 is NVIDIA. The October 16th, $225 call. Grade 70. First appearance for this exact contract. Cost about $800. Model probability, 27%. Earnings arrive Wednesday, August 26th. A strong outlook could support the call, but an earnings gap and a drop in implied volatility can damage the premium even if the stock rises. Number 4 is Denison Mines. The October 16th, $4 call. Grade 70. First appearance. Cost about $30, the lowest call premium on the board. Model probability 30.1%, the highest call side estimate. Construction progress at the Phoenix Uranium Project supports the story. Construction, permitting, financing, and uranium prices are the risks. Number 3 is KE Holdings. The October 16th, $19 call. Grade 70. First appearance. Cost about $60. Model probability 27.5%. Quarterly profit more than doubled. Revenue still declined, so the call needs continued operating improvement. Number 2 is SoFi. The October 16th, $20 call. Grade 71. Second appearance. It returned at rank 2, although its grade fell 3.3 points from its prior recorded grade. Cost about $116. Model probability 29.8%. Record quarterly revenue supports the bullish case. High expectations and credit conditions are the risk. And the number one call is SpaceX. The October 16th $150 call. Grade 71. First appearance. Cost about $740. Model probability 26.9%. Launch, Starlink, and artificial intelligence infrastructure can support price discovery. Valuation, investment spending, and post-listing volatility can reverse the call quickly. That is the complete call board. SpaceX, SoFi, KE Holdings, Denison Mines, NVIDIA, Meta Platforms, Alcoa, New Holdings, Intel, and Petrobras. Now, the puts, again from 10 to 1. At number 10, Oklo. The October 16th $40 put. Research grade 58. First appearance. Cost about $325. Model probability 27%. The first criticality milestone raised expectations. The bearish case needs valuation or execution pressure. Continued nuclear enthusiasm is the risk to the put. Number 9 is Planet Labs. The October 16th $20 put. Grade 58. First appearance. Cost about $255. Model probability 28.8%. Earnings arrive September 3rd. Government programs and satellite milestones can support the stock, so the put needs real weakness, not just a calendar event. Number 8 is Xpeng. The October 16th $11 put. Grade 59. First appearance. Cost about $64. Model probability 28.4%. Revenue improved, but year-over-year deliveries were almost flat. Better margins and robotics financing are the risk to the bearish case. Number 7 is D-Wave Quantum. The October 16th $18 put. Grade 61. First appearance. Cost about $180. Model probability 26.7%. The market may demand that a large bookings increase turn into revenue. Rapid commercial progress can squeeze the put. Number 6 is Tesla. The October 16th $330 put. Grade 63. Third appearance. Its grade fell 4.8 points, and its rank fell from 1st to 6th. Cost about $1,200. Model probability 26.8%. This is still a valuation and expectation test, but delivery, energy, or autonomy headlines can reverse a bearish position fast. Number 5 is SoFi. The October 16th $18 put. Grade 64. First appearance for this exact strike. Cost about $100. Model probability 28.9%. The bearish case is that high expectations finally overpower the record quarter story. Strong revenue, membership growth, and profitability directly oppose the put. Number 4 is Nike. The October 16th $37.50 put. Grade 65. First appearance. Cost about $169. Model probability 27.8%. Direct sales fell 7%. Wholesale growth, margin improvement, and a successful turnaround are the risks to the put. Number 3 is Intel. The October 16th $80 put. Grade 66. Second appearance. The grade slipped 0.3 of a point, and the rank moved from 2 to 3. Cost about $440. Model probability 26.1%. The bearish case focuses on losses and recovery execution. Revenue growth and manufacturing progress oppose it. Number 2 is TeraWulf. The October 16th $15 put. Grade 66. First appearance. Cost about $157. Model probability 26.6%. The bearish case is an artificial intelligence build-out execution test. Long-term contracts and rapid capacity growth can squeeze the put. And the number 1 put is SpaceX. The October 16th $130 put. Grade 68. Second appearance. It returned at rank 1, although its grade fell 1.5 points. Cost about $775. Model probability 28.8%. A failed rebound could shift attention toward valuation and spending. Launch, Starlink, and artificial intelligence enthusiasm remain the major risk. That is the complete put board. SpaceX, TeraWulf, Intel, Nike, SoFi, Tesla, D-Wave Quantum, Xpeng, Planet Labs, and Oklo. The 5 returning exact contracts tell us more than the word new ever could. SoFi's $20 call returned for a second appearance and moved to rank 2, but its grade fell. Intel's $95 call also made a second appearance. Its grade improved while its rank slipped because today's competition was stronger. On the put side, SpaceX returned for a second appearance and rose to rank 1 despite a lower grade. Intel slipped 1 position with a nearly unchanged grade. Tesla made a third appearance, but a 4.8-point grade decline pushed it from 1st to 6th. Rank is relative to today's board. Grade change measures the contract against its own prior record. Appearance count tells us whether the exact contract has stayed relevant. The 3 numbers answer different questions. NVIDIA is the clearest example. Yesterday's frozen cohort contains the October 16th $220 call. That exact contract stays in the 10-session test. Today's daily board selected the $225 call. It receives a first appearance card because the strike changed. We do not replace yesterday's contract, and we do not pretend today's card has yesterday's history. Earnings are Wednesday. The stock direction matters, but so do the price paid for the option and the change in implied volatility after the announcement. Being right on the stock is not automatically enough to be right on the option. Here is tonight's rule. A card can rise without becoming buy ready. Rank shows relative contract quality. The gate shows whether the setup is complete. The common mistake is treating a higher rank or model probability as an entry instruction. It is not. A long option can lose its entire premium, and time value generally erodes as expiration approaches. Tomorrow, a stronger rating would still require a defined stock price trigger, confirmation of a reasonable live spread, a clear invalidation, and a position size that fits the risk. Missing evidence stays missing. Our research archive now covers 18 scanner snapshots, 360 dated list appearances, 247 unique exact contracts, and 125 fixed session observations. Approved later price history covers 93 of 213 contracts. 3 later doubled at an observed bid, and 5 touched double at a traded high. Those are verified historical opportunities, not assumed exits, and not account returns. The lesson is not to buy every card. It is to use the cards to find the strongest candidates, wait for the evidence, take movement seriously, and record every outcome. Tomorrow's board may move again. The frozen cohort will not. We will keep updating the grades, appearance counts, catalysts, risks, and verified history so regular working people can see what changed and why. Professional level tracking for regular people with regular jobs. This is educational research, not personalized financial advice. Options involve substantial risk and can expire worthless. Verify live prices, bid and ask spreads, liquidity, events, and suitability before making a decision.